programmed to deliver price in time, which means time and price are the two major quantities its programming will be based on. I started researching into time measurement and price to find relationships between these two quantities, and that led to the discovery of IBDA prices or IBDA number. Hello traders, hope the market has been treating you nicely. I'm very happy about the community we are building here with members who are learning and applying the lessons to their trading. I want to give a shout out to one of our members, Ibrahim, who took time to backtest the lessons from our liquidity video and was able to find 80% accuracy on the 4-hour time frame for single liquidity zones. If you are yet to see that liquidity video, please do well to watch it right after this one. When I asked him about the liquidity pool and the consecutive liquidity round models, he said those are like 100% accurate. That is without direction analysis, without contract period analysis, volume, open interest, IBDA price and other smart money analysis. You all can imagine what the efficiency will be if used in combination with this other analysis. One of these analyses or concept is what I'll be explaining in this video, and that is IBDA price. So I'll advise you to sit back, watch the video to the end without skipping any part to get the full details of the concept. Some days back I made a post about this on the community tab and on Instagram, and everyone in the comment section wanted a video explaining the concept. So here you have it, this is the video. If you are new to the channel, you are welcome to Tom's Capital. Here we approach trading with facts and institutional figures, which is the most realistic smart money approach. Subscribe to the channel, turn on post notifications so that you don't miss out on our coming videos. Price is delivered by the Interbank Price Delivery Algorithm, commonly referred to as IBDA. It is programmed to deliver price based on the market dynamics, which is basically demand and supply or accumulation and distribution. When I say accumulation and distribution, I don't mean ranging price action as widely taught by many Forex educators online. I mean real accumulation of orders by institutional traders and distribution to retail traders. This is exactly what is going on in the market. The institutions buy bulk at cheap price during accumulation phase from the big banks and sell it in bits to the retail traders at higher prices during the distribution phase. The forex market is just like the physical market, where wholesalers buy bulk from producers at low price and sell it to the retail traders at higher prices. I think this process is called distribution chain, which is similar to what we call it in the forex market. Anyways, that's beside the point for this video. I'll treat it in another video. Back to IBDA. The algorithm is programmed to deliver price in time, which means time and price are the two major quantities its programming will be based on. In the light of this, I started researching into time measurement and price to find relationships between these two quantities. To cut the long story short, I found a way to project time on price, and that led to the discovery of IBDA prices or IBDA number. On application to the chart, I was totally blown away by how something this simple have been there all this while and no one is seeing it. Time is measured based on the rotation of the Earth, which is 360 degrees. Within this 360 degree angle, we have important angles which are derived by adding cardinal and ordinal crosses to the circle. These angles are 0 degrees, 45 degrees, 90 degrees, 135 degrees, 180 degrees, 225 degrees, 270 degrees, 315 degrees, and 360. Price on the other hand is linear, which is a series of numbers from 0 to 9, and the numbers are presented in units, tens, hundreds, thousands, and so on. Projecting the important angles in time measurement on linear price, I got 0, 1.5, 5, and 8.5 as important number in time. This is shown in the illustration on the screen. This circle represents the Earth and it rotates 360 degrees on a complete cycle. On adding the blue cardinal cross and the red ordinal cross to the circle, we have these 8 important angles. Taking the diameter of the circle as price, which is linear, we mark the number range from 0 to 10. Projecting the important angles on the linear numbers, we got 0, 1.5, 5, 8.5 and 10. Since IBDA is programmed to deliver price in time, I call these numbers IBDA numbers, which characterize IBDA prices in units, tens, hundreds, and so on. So in tens, we have 0, 15, 50, 85, and 100. And in hundreds, we have 0, 150, 500, 850, and 1000. In this same way, we can apply the IBDA number to price on any asset or forex pair. For instance, on Euro USD, if the price is within 1.000 to 1.1000, which is 1000 pip range, we can mark the IBDA prices within this range, and that will be 1.0000, 1.0150, 1.0500, 1.0850, and 1.1000. These prices act as decision prices for IBDA, where reversals and continuation take place based on the present market dynamics. This explains why IBDA prices appear as perfect support and resistance levels on the chart. Let's go into the Euro USD chart and mark up IBDA prices and see how IBDA reacts at these prices. This is the Euro USD daily chart. As you can see, we have price action from July to September on display as far as time is concerned. On the price side, we have a 2000 pip range from 1.000 to 1.2000. IBDA price for this 2000 pip range will be 0, 150, 500, 850, 1000, 1150, 1500, 1850, and 2000. Let's go ahead and mark all these IBDA prices within this range, starting from the lowest. The first price from the bottom is obviously 1.0000, that is right here. The next IBDA price is 1.0150, which is right here, 1.0150, followed by 1.0500 right here. Then we have 1.0850, and the next one is 1.1000, which completes the first 1000 pip range. Let's move on to the second 1000 pip range. The next IBDA price is 1.1150, followed by 1.1500. The next one is 1.1850, and lastly we have the 1.2000. That's all the IBDA prices within the 2000 pip range. Even without pointing it out, you can already see how price react at these prices. Let's go through it together, starting from right here at the beginning. Price dropped to 1.1850. Let me just say 1.1850. Bounced back to 1.2000, after which it continued downwards, breaking the 1.1850 price, which was retested right here, giving us this bearish move. Remember, this is a daily chart, and this move here lasted for about 15 days and delivered almost 200 pips. After the 200 pips move, price retraced back to 1.1850 from where it sold off the full 350 pips to the 1.5000 price. Price bounced from there, after which it continued downwards, breaking the 1.5000 price and headed straight for the 1.1150 before retracing back to retest the 1.1500. Price stayed in this range for a while, bouncing from 1.1150 to 1.1500. It successfully broke that level right here and headed straight for 1.0850. It retraced to retest 1.1150 right here 3 times using the 1.1000 as support, as you can see it here. Price broke 1.0850 here and immediately retested it and crashed a full 350 pips to hit the 1.0500 level. Price retraced back to 1.0850, although it failed to hit the price before it continued bearish to hit 1.0000, where it reversed and crossed above 1.0150, which it retested right here to give this bullish move. This is how IBDA delivers price on all assets, from currencies to metals to indices, even crypto. We've seen how IBDA efficiently deliver price using these IBDA prices on Euro US dollar. Let's do the same on Pound USD chart to confirm that this does not only work on Euro but on all assets. Here is the Pound USD daily chart for the same time period as in the Euro USD chart. Here are the IBDA prices in the price range displayed. You can quickly run through price movement from the beginning to the end to see how these IBDA prices are used as decision-making levels in the market. This is not a guess but a fact. If you still doubt it, here is a Bitcoin daily chart. Here are the IBDA price levels. You can quickly run through price again and see how the IBDA prices are used even on crypto. You can take time to mark up these price levels on any asset you like to further verify that IBDA uses these specific price levels to deliver price. If you are getting value from this video, like it and share it to reach more traders. If you are yet to subscribe to the channel, what are you waiting for? Smash the subscribe button right now and turn on post notifications so that you get notified whenever we drop our video. The next thing we are going to look at now is how to apply the IBDA prices to your trading. One of the major differences between institutional traders and retail traders is the execution prices. An institutional trader executes trades at predetermined prices, whereas a retail trader doesn't even care about price but cares so much about patterns and price action. The concepts of trade zone and entry prices are the major applications of IBDA prices to trading. For a setup to be valid, it must be in a trade zone. Similarly, the most efficient entries are those taken at predetermined entry price levels, which are based on IBDA prices. I have two categories of IBDA prices that I use. The first one is the major IBDA prices and the second one is the minor IBDA prices. The major IBDA prices are based on a 1000 pip range and are used as trade zones where swing setups are formed. The minor IBDA prices are based on a 100 pip range and are used as entry prices where trades are taken and for day trading setup zones. There you have it, IBDA price delivery secrets exposed. If you have any question, you can leave it in the comment section or DM me on Instagram at Tom's Capital. I'll answer as many as I can. Don't forget to like the video, share it with other traders to help them. If you are yet to subscribe to the channel, subscribe right now by clicking the subscribe button. Turn on the bell notification icon so that you'll be notified when we upload our videos. I'll see you on the next one. Have a good day and happy trading.